Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramanian.
Good afternoon. I'm Ira Dugal. Let's get you the headlines this Monday afternoon. The Nifty holds on to the 10,500 mark in afternoon trade. Pharma automakers moving higher.
SBI is among the top Nifty loser after the public sector lender reported its first quarterly loss in 17 years.
Bank of Baroda trading close to 7% higher after the bank reports strong operating numbers in the third quarter.
BPCL and HPCL also trade lower after reporting lower refining and marketing margins in the third quarter.
And the US FDA pays a visit to Sun Pharma's Halol plant.
We get you some of the biggest voices from the banking and regulatory space today. SBI Chairman Rajneesh Kumar lays out what he expects in the coming financial year. Jay Kumar of Bank of Baroda tells us how they plan to roll back on some of the bank's international plans. And IRDA Chairman T.S. Vijayan speaks about the government's National Health Insurance Plan. All that coming up.
All right, first, as always, let's look at how the markets are shaping up. About a 0.7% higher on the Sensex. Neeraj is joining us with the action on the markets. Neeraj.
Yeah, not bad. So actually much better than what we were thinking of at the start of the trading day today. And the volumes too much better than what were the volumes and Friday sessions. If you just bring up the turnover picture, you will see, you would remember on Friday at the same time around, the turnover was lackluster. In today's session, slightly better than Friday. So it will be very important to see if indeed we make another day, because it's a truncated week as well, or do we actually go ahead and do the normal 35,000 crores on the cash side and on the F&O side about 7.5 lakh. What's moving around? I think the steel name and the metal name is doing very well. Tata Steel leading the charge really on the index. Results impact coming into play, or maybe just the whole momentum around the steel space, because SAIL too, or the last 2 or 3 sessions after it's come out with its numbers and the reports thereof, has done exceptionally well. Another 2.5%, 3% in the session today. So continued traction for the metal names. And pharma, you guys said it in the headlines too. Lupin, Oro, Sun Pharma. There is expectation about Halol, or at least people believe that what if Halol remediation does happen, because that's a really big trigger for Sun Pharma. I dare say watch out for Spark as well. That will benefit a lot. But essentially the entire pharma pack, large cap pharma pack, seems to be doing okay. Look at 3M India. Now, we're trying to figure out as to why is it that the stock could suddenly move up 16%. It's not a high beta stock. It typically doesn't tend to do so much in terms of volumes as well. Results came out on the 2nd of Feb, so there is no result trigger either. But 3M India has been a big mover in trade today. Results impact being seen on Amara Raja and Avanti Feeds. Actually fabulous numbers from Amara Raja. Battery makers, you can talk about how the auto movement would essentially benefit both Exide and Amara Raja. But I think they did very well, not just on the top line, but on the operational front as well. So 6% higher for that one. And last but not the least, guys, I have 3 intraday charts that I want to mark, simply because in the small cap end of the market, it's a turn of some bounce back for select names, and it's a very identical chart which all these 3 are exhibiting, and a few others too, but I've chosen 3 as examples. Walchandnagar Industries, Vadilal Industries, Aptech. If you bring up the 1 month chart, the 1 month chart of each of these is the more interesting chart. All of these 3 are up today. And then look at what these 3 have done on a 1 month basis. A sharp fall for most part of the month and a sudden bounce back in today's session. Look at that. And the other 2 charts are just identical. Be it Aptech, be it Walchandnagar, be it Vadilal, or be it some of the others. An identical chart on a clutch of these names. So some bit of bounce back for small cap names in the session today.
Neeraj, thank you for that. Corporate earnings. Marico has gained the most since November 17 after its third quarter performance. Joining us now to take us through some of those numbers is Shaugato Gupta. Also to take us through that is Saloni from our research team. Over to you, Saloni.
Thanks for that. So good afternoon, sir. Talking about the quarter went by, how much of volume growth will you attribute because of low base due to demon, and how much of it has to do with genuine pickup in demand?
So if you look at our last year, quarter 3 compared to other companies, our performance was not that muted. So I think the way to look at it is, I would say that maybe we got a 1 or 2 percentage points growth, extra growth because of the base. But overall, it was within that 8 to 10% volume growth aspiration. Although I must say that it could have been a little more broad-based in India, where Saffola growth wasn't as per expectations. So this is something we need to fix. But Parachute growth was good. As far as value-added hair oils is concerned, I think if you take out the CSD component of it, it delivered a double-digit growth, and some of the new products also did extremely well.
And And sir, gross margins has come off substantially. How much of this is because of copra prices, and what part of raw material cost does copra comprise currently?
So let me just give you a perspective as far as copra is concerned. There was a 91% year-on-year input cost increase in copra, and we have not passed on to the entire cost push to the consumer, because we believe that we are conscious about the value proposition the consumer needs to have, and also the fact that our focus is on volume growth and market share. I think we going forward, we believe that copra being cyclical, sometime during 18-19 there would be a softening of copra prices, and there would be some short-term margin pressures, but we have put in place an aggressive cost management program which will ensure that we are able to offset some of these input cost pressures.
And what about other raw material cost? Are you witnessing an uptick in those inputs overall, and what kind of impact will it have on pricing and margins?
So as I said that I think copra is the one which has got impacted the most. There would be some increase also in crude-based cost, because the crude has gone up versus last year. Having said that, I think crude has now settled down to a certain level. So I think the biggest impact is copra, but as I said that it is peaked out, and we see in maybe 2-3 quarters from now there would be some softening that will happen.
And what will Marico now focus on in priority? Will it be better in terms of pricing or gaining market share going ahead?
So we continue to focus on driving volume growth and market share. We believe that as long as we are able to deliver a threshold margin of 17%, and our focus will continue to remain that and improve our innovation contribution. And now that the new products are doing well, some of them, we want to improve that traction of innovation.
And sir, what's behind the growth in international business and your overall outlook there?
So we have had a 9% constant currency growth in the international business. I think other than Vietnam, all the markets have delivered double-digit growth. Vietnam is something which we have to solve for. And as far as the currency depreciation is concerned, a significant portion of the anniversarization of the depreciation should happen from this quarter. Therefore, the INR growth should be more in line with the constant currency growth going forward.
And how are you assessing the volume growth in Parachute and other value-added hair oil segments? Is the volumes growth sustainable there?
So I think as far as the value-added hair oil growth is concerned, we have grown 8%, but if you take out the CSD component, it's double-digit, and we are fairly confident of continuing to deliver the double-digit growth in value-added hair oil. As far as the male grooming is concerned, again, we believe that we should be able to, now that we seem to have in terms of the worst is behind us, and we should be able to deliver 15-20% plus growth in the male grooming segment.
And so my last question to you is, in terms of products, Saffola has had to deal with its own issues with volumes remaining flat overall. What are the challenges here, and how is the company addressing them?
I think we have diagnosed some of the issues which we have to solve in Saffola, as far as the communication strategy and as well as the promotion strategy is concerned. What has happened obviously in terms of the competitive pricing, we have had a little out of line in terms of that, and I think it will need to be fixed. It will take 1 or 2 quarters, but I think if we can put in some of the strategies in place, Saffola should be back into good growth in the next, maybe definitely from Q1 next year.
All right, sir, it was a pleasure speaking to you. Thank you for speaking to Bloomberg Quint. So that was the management of Marico, quite confident about growing in double digit in their value added hair oil segment. Back to you guys in the studio.
Saloni, thanks so much for that. That's Marico, but we are staying with earnings, bunch of bank earnings to get through. State Bank of India is the top loser on the Nifty today after the public sector lender reported its first quarterly loss in about 17 years. What hurt the bank was both a drop in treasury income and higher provisions. bad loans also spiked. Shraddha Babla is here with a breakup of those numbers. Shraddha.
Well, to start off with, I just want to explain what has possibly driven the net loss of 2,400 crores for the quarter for SBI. So the first factor could be the treasury loss of 3,256 crores in the December ended quarter. Now, if you compare it to the sequential quarter in September, they had a gain of 3,722 crores. So that's one thing which led to a profit miss as far as SBI is concerned. The second factor is also an exceptional item, which obviously is a known bit, but the second quarter had 5,436 crores of one-time gain that the bank got on account of the stake sale in SBI Life Insurance during the quarter. Third bit is the weaker growth trend. So the loan growth for the quarter came in just at about 1.2% on a sequential basis. That's the kind of growth number that we have seen. Again, it's the contraction in the corporate book that can be blamed for the weaker loan growth, because the retail book remained relatively steady. So that explains the net loss number. But what explains the big jump in the gross NPA number to 10.35% and a big slippages number of 25,000 crores or so? Well, that's the divergence number. SBI reported a gross NPA divergence of about 23,300 crores for FY17. That stands at about 20% higher than what was reported by the bank. How does that compare to some of the other banks that have reported divergences? For HDFC Bank, the percentage stood at 35%. For Union Bank of India, 8.5%. And Axis and Yes Bank, of course, the numbers are much higher. They had reported the divergence number only in the second quarter. You also had RBI assessment which was completed during the quarter for Kotak Bank and ICICI Bank, but they were not required to report divergences, which means that they were lesser than 15%. IndusInd Bank, that divergence, the audit is over, but they're still awaiting the report. So as far as SBI is concerned, the number does not seem as bad as some of the other banks, but it did come as a surprise as far as the street is concerned. But let's listen into what Rajneesh Kumar had to say with respect to the outlook on the asset quality and the credit growth going forward.
Basically, if it is, one is that gross slippages next year, our estimate is 2%. And there are like 78,000 crore of NPAs in NCLT 1 and 2. So by September, this will be out of the bank's books, either through recovery or you write down or whatever you do. But that part will be over. Our estimate is 10%, which I presume is a feasible number for State Bank of India. And so better quality credit at a price which is liking of the State Bank of India. And still, I believe that we will be able to grow at around 10%.
All right, that's State Bank of India, and incidentally in that conversation, Rajneesh Kumar also told us that there will be no divergence as of March 18, which will be the first financial year numbers that he will report. There's also Bank of Baroda. Now that stock is trading higher. Looks like markets have liked the strong operating profit, perhaps also the higher provision coverage ratio on that particular account. Shraddha, you want to take us to the review there?
Well, yes. So while the profit was a miss as far as the expectations are concerned, and that was largely on account of higher provisions, it's the operating profit which had offset the miss to quite some extent. So that was the key highlight of the quarter, a strong 40% growth as far as the operational profit is concerned. That largely came on the back of a strong NII growth, controlled OPEX growth and lower MTM provisions, which means that they've managed the treasury book a lot more better than, for example, an SBI. The second thing is that the loan growth picked up quite strongly to 14.1%. That's at a multi-quarter high. Again, that was driven by largely the domestic retail book, which grew by a strong 33%. Another good factor for Bank of Baroda's numbers was that the provision coverage ratio for the bank had inched up further in the quarter to 68%. And that 68% number is probably one of the best ratios as far as at least the PSU banking space is concerned. Gross NPA, marginal spike coming in there, 11.31% versus 11.16% on a Q-on-Q basis. But in absolute terms, the gross NPA was up about 4% on a sequential basis. And lastly, when it comes to the slippages number, they did come in significantly higher at about 5,600 crores. Largely, that was on account of the exposures to telecom, infra and power. But broadly, the overall stressed asset pool remained steady as a percentage because most of these slippages came from the restructured book itself.
Shraddha, thank you for that. Well, the bank is now going to be trimming its international operations and focus on the domestic business, said its MD and CEO P.S. Jayakumar. Speaking to Bloomberg Quint's Vishwanath Nair, he says there's a need for the bank to reevaluate its presence on some of the large markets abroad so as to clean up its books back home. Vishwanath started off by asking him about the recent revelations made in South Africa, where the Gupta family has been accused of using their Bank of Baroda accounts to transfer alleged illicit money.
I will tell you that we are fully aware of what's happening with respect to the issues in South Africa. We are working with the regulators and other authorities with respect to whatever else they're doing for completion of their exercise in ascertaining the issues that are there for the system as a whole and insofar as they relate to Bank of Baroda. Till this time the results are concluded, the analysis are concluded, it would not be appropriate for us to start to comment on it. We should let the course of the investigation get completed. But the one thing I could say to you though is there are a number of actual inaccuracies in those reports. I don't want to get into point by point rebuttal. This was said and that's not what it is. But the fact is that there is a amount of inconsistency, and I'm hoping our point of view in relation to the points of view expressed by the media or by anybody else is finally established when this investigation gets completed.
Sure, but going ahead, what is your plan with that business? You know, that
See,
part
one of the things
world?
I wanted to emphasize is most of the issues that we're discussing in South Africa and in other markets where we've had similar issues are primarily historical issues.
Okay.
Some of the issues in South Africa date to 2010, 2011, 2012. And then we're using the current methods of KYC and AML and saying, hey, did those comply? You know, they're historical issues, and after that, from 2015 onwards, we're significantly strengthening our compliance environment, KYC, AML, but also in terms of the organizational structure, making the compliance organization report to the central office. And the entire bank organization itself, where the executive director in charge of risk management does not have business responsibilities. We've done a fair amount of work with respect to automation of work. And we're also kind of saying that we should be more focused in the larger markets than be present in markets where our shares are limited or presence is not necessarily required from a customer perspective as well. And you're working through those franchises.
So then that business percentage, whatever part was coming in from your international business, that is expected to go down.
I wouldn't put it that way. What is happening is that the locations where we stay, where we have a larger presence, there'll be much more focus with respect to them, and then the opportunities of those businesses to grow will be there. But at the end of the day, the real issue is how important are you to those markets, how important are you to the customers, how well you can serve them, how large is the opportunity pool itself. Remember, we work in India, which is one of the largest markets in terms of number of people. And then the question of capital and what is a judicious way to apply the capital. Those are all the points that needs to be considered while looking at the approach. So it's a part of a process where we are reevaluating our presence in many of the markets, and some of them we need to leave. But some of these things you don't announce till such time as you've got the consent of the host country regulators with respect to what's happening. And then there are other markets where we need to put more energy and focus on. If you take a South Korea, look at Japan, those are markets where we could potentially increase the size of relationship we have. So it's a part of a continuous rebalancing. But what we are trying to do in all of this exercise is that we are trying to serve our customers across the geographic requirements they have. And therefore, supporting them in 4 or 5 countries, making them funds available or trade products available or introduction to other retail customers and vice versa being done, all of which are principal to our ability to differentiate and support our customers in a more comprehensive. In some sense, we are a small global bank, you can say, insofar our customers are concerned. So we are financing pharmaceutical companies, expanding and setting up factories in the United States. We have customers of ours in UK of Indian origin who are setting up factories and investing in business in other markets. And we see a large amount of work where we're supporting the UAE with respect to logistics, trade, new manufacturing facilities where we have contributed significantly in those markets. So those markets we continue to strengthen and grow. But within that overall scheme of things, there is a reallocation that is happening, which is a natural part of any business growth.
lastly, on the on what FY19 and FY20 is going to look like, because a large part of the banking system expectation depends on these 2 years, and they're expecting a turnaround. They're expecting a sort of...
So there was this discussion a couple of days before in one of the publications that hosted Mint, and the overall consensus that emerged over there is that there is a lot of reasons to be optimistic. Speaking specific to Bank of Baroda and without getting into any numbers, I think our opportunities look good. A, we are growing. B, we have capital to grow. And the kind of investments and the restructuring and the reorganization, the entire transformation exercise that we're doing is positioning us for better growth. And one is also expecting that the NPA cycle, whether it is this quarter, next quarter, the following quarter, will have its run. We're also hoping some of the non-core assets that we have, we liquidate and get better returns out of them. There's some optimization that will happen. So when you put all of these things together, there's more reason to be optimistic. I mean, there are very good reasons to be optimistic, but I really don't want to get into a forecast around what those numbers will be at this point of time.
Moving away from banking, HPCL and BPCL are among the top Nifty losers today after the two oil marketing companies came out with numbers late on Friday. One perhaps reason for this is the drop in the refining and marketing margins. Somit Sarkar joining us with the details. Somit.
So if you see in the third quarter of financial year 2018, it was the big inventory gains that saved the day for all the three oil marketing companies. If you compare to the last quarter, Indian Oil's inventory gains increased by around 496%, while that of BPCL and HPCL increased by 133% and 86%. So if you remove this inventory gains and check the core operational profit that these companies had from their refining and marketing business, the picture is quite different. Now, other than Indian Oil Corporation, BPCL and HPCL both saw a fall in their core operational EBITDA. Now, BPCL's core operational EBITDA fell by around 44% to 1,592 crore rupees, while that of HPCL fell by around 26% to 1,886 crore rupees. Now, Indian Oil Corporation saw an increase of around 2.5%, but this is mainly because of a strong refining business that the company had. Now, the refining business of both BPCL and HPCL also saw an uptick, but still their core operational EBITDA fell because of a very weak marketing business. So, if you see the core marketing EBITDA of these companies, for all the three oil marketing companies, it fell. IOCL's core marketing EBITDA fell by around 6% to 1,752 crore rupees, while that of HPCL fell by around 47% to 932 crore rupees. Now, and BPCL reported a minor loss of 11 crore rupees versus a profit of 1,160 crore rupees reported by the company in the last quarter. Now, this marketing segment has reported a weak numbers despite an increase in their sales value. Now, on an average, if you see the sales of petroleum products for all the three oil marketing companies have increased by around 8%. For IOCL, it was 8.5%, and for BPCL and HPCL, it increased by 8%. Now, this fall is mainly because that the gross marketing margin earned by these three oil marketing companies on sale of every liter of petrol and diesel fell to 2.3 rupees per liter and 1.9 rupees per liter versus 3.1 rupees per liter earned by these companies in the last quarter. The marketing segment was also impacted because of the digital discounts that the company had to give and because of a negative impact of GST, which weighed on the financials of the company in the third quarter of financial year 2018.
All right, Samit, but they still managed to declare dividends though?
Yeah, there are some feel-good factors also for all the three oil marketing companies. Now, IOCL's debt came down by around 18% and they declared a dividend of 19 rupees per share. Also, there was a bonus issue of 1:1. BPCL's debt came down by around 13% and they declared a dividend of 14 rupees per share, while HPCL's debt came down by 15% and they declared a dividend of 14.5 rupees per share. Lastly, one good news for the government also. They get around 6,900 crore rupees from the dividend that IOCL and BPCL have announced, and also this figure will also go up post ONGC announces a dividend because its subsidiary, that is HPCL, has announced a dividend, so we can likely expect a dividend announcement from ONGC going forward on this.
Samit, thank you for that. Let's move on now. Quick service restaurant owners are a happy lot. Some of the country's largest food chains like McDonald's and Domino's have posted double-digit growth in sales in the last quarter. Agam is here to tell us why and what's working. Agam, so what, suddenly people are eating more pizzas and burgers?
Well, apparently so, Harsha. So before I get into the reasons behind the surge that we've seen in the QSR space in the past quarter, let me just take you through the numbers. So in terms of sales growth, as you can see, for something like Dunkin' Donuts, M&M, or McDonald's, KFC, or for that matter, Pizza Hut, what we've seen is a good amount of growth coming in across all segments. And this is just the Indian numbers. So this is all the shops which are open in India. If you consider same-store sales growth as well, at least for something like Westlife Development or for that matter, Jubilant FoodWorks, we've seen about 17 or 8%, as much as 21% for something like a Westlife Development. So the same-store sales growth is also doing well. The question then is that what are the reasons behind such a great quarter? Well, for one, of course, is that we were working with demonetization. That's a low base. But there has also been an uptick in the discretionary demand, and that's the reason why we are looking at the strength coming in. Now, a lot of these managements have suggested that they're looking at re-imaging a lot of their stores. They've been bringing new products. They've been changing their product lines as well as menus, and that's also something that is spurring growth for a lot of these companies. Can we expect this growth to sustain? Well, we're looking at mixed cues, at least as far as managements are concerned, because while the management of Westlife Development says that yes, this can be sustained, there is a genuine uptick in demand. Jubilant FoodWorks is a little more cautious when it comes to its outlook for the discretionary demand, saying that a lot of this growth was spurred only because of changes in menu, perhaps not necessarily because demand variables have changed. That said, a lot of analysts on the street are very upbeat, and they have upgraded and increased the price targets both for Westlife Development as well as Jubilant FoodWorks. Well, and it remains to be seen whether or not we actually continue to see such strong numbers as we move into the next couple of quarters as well.
All right. Thanks so much, Agam. That's an interesting story there within the earnings. Let's slip into a quick break. Coming up on the other side, the big story that's been playing out for the last few days, Singapore Exchange is all set to develop new India products after NSE snapped a pact between the two exchanges. More details and more views on the other side. Welcome back. You're watching Power Lunch. Let's take a look at the headlines. The Nifty holds on to the 10,500 mark in afternoon trade. Pharma automakers trading strong.
The Singapore Stock Exchange says it's going to launch its own India products after the NSE snaps pact.
Indigo has been forced to ground as many as 11 Airbus 320 Neos after the Pratt & Whitney engines malfunction thrice during taxi.
All right, let's do a quick check on how the markets have been faring. It's been an interesting rebound. Agam is here with some of the key movers in the last half hour. Agam.
Well, I think it's important that the Nifties are held on to 10,500 for now, and albeit this is on a relatively low turnover. So if you consider the cash turnovers, well, that stands at a little over 18,000 crores, and the F&O turnovers, for that matter, stands at well, a little over 2.5 lakh crores, and that's actually below average. But what we have also seen is the volatility falling to a certain extent. It's in fact down by as much as 4%. What really stands out in today's day of trade is the broader markets doing well and better than the benchmark indices. So both the mid-cap and the small-cap indices have advanced by well over 1.4% currently. In fact, the small-cap index is up nearly 2% in today's day of trade. The realty index, which has seen so much volatility over the past 3 to 4 sessions, is advancing. On the other hand, some weakness seeping in for the information technology index. What's leading the gains when it comes to the benchmarks is Aurobindo Pharma, Tata Steel and Yes Bank. And on the weaker end, we have BPCL and HCL Technologies showing some amount of weakness. But on the whole, a steady day of trade, though not too much to speak for when it comes to turnovers. As long as the Nifty holds on to 10,500, it's going to be considered as a positive.
All right, thanks so much for that, Agam. Now on to the big story that's been grabbing attention of both foreign investors and domestic participants, actually. It looks like SGX, that's the Singapore Exchange, is going to try and launch its own products after they snapped a pact with NSE, or NSE snapped a pact with them. Let me first go across to Sajid. Andy Mukherjee is joining us from Singapore as well to debate the issue. But for the news first, Sajid, we've reported that they are trying to come up with some sort of a backup plan. That's the Singapore Exchange.
That's what SGX said in its release, that they're going to come out with a slew of Indian products so that there is continuity of products for the global clients and for time zones they represent. But the bigger thing is that it's a push which has been given by the Indian government, and exchanges are now focusing on whether the gift city, which never took off, is this the right time for it to take off because of this measure there. SGX also in its release has said that it's going to work with National Stock Exchange with respect to products on the products in the gift city. So that's something which we need to watch out for, especially if the incentives are good enough for FIs to shift there. And for that matter, let me highlight what exactly the incentives are. For an FPI coming from Singapore, you don't have an LTCG or an STCG. You don't have STT or CTT. You don't have to pay stamp duty, and there is no MAT either. The taxation happens at the place of residency of the FPI. So if a FPI coming from Singapore, the taxation happens in Singapore, and if the FPI is paying zero tax there, there's zero tax for FPI. So it could lead to a identical migration to a gift city if there is enough liquidity in this city, in this exchange.
Okay. Before I get in, Andy, very quickly, Sajid, what has NSE said on this matter so far?
NSE has made its decision that it's going to terminate its license with SGX, and will take 6 months because the termination clause talks about 6 month period. And after 6 months, is when within 6 months is when they going to see some kind of migration happening. Now they're hopeful that the migration happens to either to the main board or to the IFSC, but they're not sure whether it's going to happen because there are a lot of other indices or other factors which are going to play out. And one of them is the futures on MSCI indices, like MSCI India futures is traded on the Singapore Stock Exchange and CME and other platforms. How does it work?
I'll come to the risks in just a bit. Let's get in Andy Mukherjee also from Bloomberg Gadfly joining us from our studios in Hong Kong. Andy, good to have you. This reeks of protectionism, doesn't it? A bunch of boys ganging up together against a competition from overseas.
Well, Harsha, yes, protectionism indeed, but I don't think it's really it's really a bunch of boys ganging up together. I think the bunch of boys, by which I gather you mean the exchanges, the Indian exchanges, well, I think they only provided the shoulder over which a gun of bureaucratic overreach is placed, and the trigger and the finger on the trigger actually is of the government. Of that, I have zero doubt.
What do you believe is the fear? I mean, this is ironical that exchanges was supposed to be sort of the real cradle of capitalism is actually sort of being apprehensive about overseas, about a foreign competitor taking away business. Is that fear misplaced?
Look, even if okay, no. Even if, let's say, Mr. Limay is a little bit apprehensive that so much liquidity is overseas, I don't think he will, of his own volition, want to pull a plug on a relationship which dates to year 2000. I don't think he really wants to portray the image of NSE being an unreliable partner. Look at what happened to the SGX stock price today, how it fell like a stone. Now, do you think Mr. Limay will want to do deals going forward with other exchanges around the world? Do you think, knowing that he would want to do such deals, he would like to portray this image of NSE being an unreliable partner? No, I don't think that is the answer. I think the exchanges have clearly been sort of corralled into supporting this move. I think there is this. So there are two things going on here. One is that a section of the Indian bureaucracy seems to think that all liquidity with respect to India risk and trading of India risk should be strictly onshore. Because they want to see the flows, they want to see who is behind the flows, they want to see whether there is round tripping going on or not. Fair enough. Large countries want to see a lot of things, and small countries like Singapore do understand. But there is also the larger issue of India wanting to tax everything. Now you have the country's central bank governor talking about the 5 taxes on capital, and whether that's going to impinge on savings and investment rates. So these are the two issues that need to be kept in mind when looking at this whole issue of India suddenly taking a protectionist turn, both when it comes to trade flows and when it comes to capital flows, like we saw with the Friday decision. And also, let's look at it from the index provider's point of view, from the point of view of the kind of 9% allocation, for instance, that we enjoy with MSCI. Now, none of this has actually happened overnight. We've had to work for it. And if you look at the kind of things that MSCI looks at, economic development is one thing, the size of the market is one thing, liquidity is a third thing. But apart from that, they also look at this broad category called market access. And that includes whether foreign investors have access to your market or not. They also look at the ease of capital inflows and outflows. They also look at the soundness and the durability of the operational and institutional framework. Now, do you think that an Indian exchange turning around to a foreign partner and terminating a relationship which has been going on for 19 years by giving a 6-month notice will be viewed as a sound and durable institutional framework? I have my doubts. So you will have investors complaining to the index providers about accessing the India market. Now, Sajid was talking about Gift City. Now, the product, by the way, is not ready. This new product by which presumably NSE and SGX will be able to connect with one another, this product is not ready. Now, suppose you have the 6-month window elapse. So SGX Nifty is gone. Now, I am not at all sure about the single stock futures, whether they can continue or not continue. One view is that they can continue. My own feeling is that the Indian government will probably look at it something like an FX NDF product and say that, wait a minute, banks. Okay, so the Indian government can't do much with the asset managers, but it can talk to the banks, the liquidity makers, and call these foreign banks for a chai session and say that, look, this is not on. You can't be dealing in an illegal product on SGX. So I frankly don't know. I mean, I have no inside information, but my gut feeling at this moment is that even this single stock futures may not witness much liquidity. So suppose in 6 months you do not have the Gift City product, and you have all these other foreign products gone, then where does that leave the global investor community? Now, the onshore derivatives market in India, those markets are not really accredited with CFTC in the US. Right. So they may not be accessible to US investors. investors. So there are institutional features here which need to be kept in mind, and they clearly have not been kept in mind while coming out with this draconian policy measure.
Okay, hold a thought. Sajid was also alluding to the potential risk. Why don't you come in on that, Sajid, first? What could the risks be? Andy spoke about the weightage of MSCI or India on MSCI, or what 8-9%?
9%.
So what could the risks be? What could there be a backlash?
No, there could be backlash only if some of the futures, MSCI futures, or for that matter any ETF futures which has been traded on any platform is stopped. Remember, if you look at the wordings of the release which came on Friday, it basically clearly states that none of the vendors will be providing data to any offshore platform for trading on an offshore jurisdiction. That means that even if MSCI ETF is eligible for, and license, and there is an exemption provided to MSCI ETF, the futures which is trading currently on various platforms may not be eligible, and that's something which is still in a gray area, because neither MSCI is able to take a call on it whether it's going to be legal or illegal, or nor NSE. We understand that both NSE and MSCI will be in discussions on this over the next few days, and final call will be taken on that. On the issue of stock futures, which Andy spoke about, my understanding is that it won't go beyond 1 month, because there is a grandfathering which has been given for 1 month for data vendors to terminate the contract with all the platform. So the stock futures as we see today on Singapore exchange does not go beyond a month.
So for the existing contract?
For the that's 50, because that was the trigger for the entire thing to happen, right? And it's not that the government came in, the NSE itself wanted to terminate this because it was losing volumes. Nifty 50 stocks contributed 1/3 of the total open interest in India. Now, if that volume goes away, because if you look at the kind of FI volume which was coming into Nifty 50 futures in India, nearly 50% of that would have gone by the end of February to Singapore. So there was a business threat to NSE.
I get it.
When Andy says it's basically the government pushing it, I don't think so. It was the government alone pushing it. Within NSE,
there was a business case for
there was a business case, and within NSE, people were pushing for it.
Okay, Andy, if you want to respond to that, and very quickly, is this perception of a backlash, justified?
Perception of a backlash against India for this?
Yes.
Okay. Well, I clearly raised that possibility in my piece early this morning, and I agree with Sajid that nothing is likely to happen tomorrow morning. But you will maybe in 6 months' time MSCI will be hearing from foreign investors about what kind of access they have to the Indian risk, to India risk. Anyway, onshore, offshore, everything together, what kind of a risk, what kind of access they have to India risk today, and whether the quantity and quality of that, by quality I mean also the efficiency of accessing that risk, whether that has gone down 6 months from now. If it has gone down, then yes, there could be implications for our weightings in indexes.
All right, gentlemen, we'll leave it there. Thank you so much, Andy Mukherjee, Sajid, for putting that in perspective. It's an interesting story. This is not the last we've heard on this, but we'll keep it a tab on how the story unfolds. Ira?
All right, let's move on. Indigo's got a big problem at hand. Some of its new aircraft continue to remain stranded due to faulty engines fitted on the A320neos. The country's largest commercial airline put out a statement over the weekend claiming that there were 3 instances where the pilots decided to abort takeoff after the engines shut down. Bloomberg News' Anurag Kotoki, who's been following this story and now joins us. Anurag, thanks for joining us here on Power Lunch. Can you bring us up to speed with what's going on and what it could mean for Indigo?
It's quite a significant development, really. As you know, Pratt & Whitney engines have been in trouble since the day they were launched. Over the past 18 months or so, there have been several issues. But on Friday, the European Safety Union actually announced a fresh kind of an issue, which started all of this. And Indigo yesterday said that it had to replace its engines 69 times in 18 months because those engines were not up to the mark. So now what we know is that deliveries for all new aircraft has been suspended, which are fitted with the Pratt & Whitney engines, and we don't really know when this issue can be fixed. In the meantime, what Indigo will have to do is to lease older planes, the A320 CEO model, which is not as cost effective as the new models were. So we'll have to see how Airbus and Pratt & Whitney address this situation, but Indigo definitely has some trouble in its hand.
Anurag, thank you for that. Anurag Kotaki talking about the challenges faced by Indigo. Meanwhile, the US pharma watchdog is paying a visit to Sun Pharma's Halol plant. If cleared, it will pave the way for the drug maker to launch some key products in the world's largest market. Yatin is standing by with some details of some of the key medicines produced at Halol and what's at stake here. Yatin.
Thanks for that, Harsha. And as you were mentioning that US FDA, America's drug regulator has, being invited by Sun Pharmaceuticals to reinspect their Halol unit. Remember, last year the company had received a warning letter as far as the Halol plant was concerned, post which the approvals for major filings done from this plant, saw some big delays. Of course, the kind of pipeline Halol has, since it's one of the largest, facility that Sun Pharma has, and more importantly, the kind of drug filings that it has from the Halol unit is, the largest their Taro business. So clearly, as far as the US business is concerned, key of their drugs and approvals are pending. And if reinspection takes place successfully for this Halol plant, which the company said, they have undertaken all the remedial measures, could open up a whole new marketplace for the company's new drug launches. So clearly, all eyes as far as Sun Pharmaceuticals Halol unit is concerned, and so sources do indicate that probably in the next 7 to 8 working days, the inspection should get completed, post which there could be more clarity as to what exactly happened, as far as the entire inspection success is concerned. So, at this point in time, Halol unit being inspected by the US FDA officials, not best of the US FDA officers have come in is what the sources are adding, which means that this will be a very strict inspection, since a very large amount of filings are from this particular plant.
All right, Yatin, thanks so much for that. Let's move on to the insurance space. IRDAI Chairman T.S. Vijayan believes that the government's national health insurance plan is challenging but achievable. In a conversation with Bloomberg Quint's Ridhima Saxena, he said that the life insurance product regulations are on the pipeline, but will take a little bit more time. Listen into this chat.
National Health Protection Scheme, probably you can compare with the Prime Minister's Jeevan Jyoti Bima Yojana, Bima Suraksha Yojana. That's for individuals, not for crop it is coming. This is for individual and the families. The government has announced for 10 crore. Quite exciting. That's what I heard it. I said, anybody who is working with insurance, we had some inkling on that thing even before that. It's quite exciting news. Implementation will be a challenge because 10 crore families are to be enrolled into that thing. 50 crore people are coming. Big outlay is there. However, we had an experience of running Rashtra Swasthya Bima Yojana, at a very smaller level. Some states are having some insurance schemes. Some degree of expertise is there in that thing. And on the base of this expertise, I think it will be achievable target.
Do you think the allocation that has been announced, at least in the Niti Aayog presentation, the proposition of 12,000 crore that was made, would be enough for a health insurance scheme that you yourself say is at such a large scale?
We have to see at the details of the point, like what are the diseases covered, what is the maximum of the diseases, etc., etc. Unless we see the whole scheme, it will be unfair to comment on the pricing of that.
It says secondary and tertiary disease.
Secondary, tertiary diseases. Disease also there. Whether they're seeing on a particular disease, or whatever the disease, you pay 2 lakhs. Whether it is there, those things have to be seen.
Sir, you just got done with a board meeting yesterday, and reinsurance regulations were one of the things that were expected out of the board meeting. So what is the update there, and how do you see that plan going?
See, you have to see the regulation making as a process. What we do is, expert committees are coming, and it is put in public disclosure, and debate goes on. Insurance advisory committee happens. They discuss the points. The feedback is taken by all the persons and taken to the authority. And this is still under discussion.
Correct.
Final decision will be taken after some time.
So, sir, do you feel that the order of preference would stay, or do you feel that may go away, not just at the GIC level, but also in terms of securing foreign reinsurance branches at the second position? Do you think that would happen?
Oh, that is one of the things which is getting discussed. Final decision, how it will come, is I'm too premature to say that thing. There are several points where we are discussing with all the people. One more discussion we will be doing it.
Correct. So, sir, do you see when this would get implemented, the reinsurance regulations?
As early as possible, because we would like to see it in the light of the day as early as possible. One more round of discussion, I think it should be getting finalized.
All right, that's the IRDA. Out of time on the show. Thank you so much for joining us today.
Countdown is up.